Well, folks, we have a rare Ron Barron sighting. This is amazing, okay? So Ron Barron, a lot of respect for this gentleman. I'll tell you why in just a moment here. But essentially, Ron Barron went on CNBC and he's talking about some stocks he's buying now, 5 stocks in particular. I'm going to give my opinion on those stocks and kind of what Ron Barron's talking about. So we're going to watch this video first. Then we're going to go over this video right here. And I got a tremendous amount of respect for Ron Barron. He was one of the very few kind of big name investors that used to go on a CNBC and talk about Tesla stock before Tesla stock went on its huge run, essentially. And so I remember him go on there and talk about, why he was so bullish on the company, why he owned a lot of shares and whatnot. And I just have a tremendous amount of respect for that because that was a time period back then when Tesla stock was not like this ultra successful thing. A lot of people had a lot of doubts about it, that it was a money furnace, that they were never going to be profitable, and that, to be quite frank, a lot of people thought they were going to go bankrupt. They were never going to make it, right? And so, as a big name investor, I have a lot of respect for somebody that kind of risks their reputation and brand a little bit around a company, and he would go on there and fight for that company. And so I just kind of always appreciated that with him. And he's got a pretty impressive track record over time. So Ron Barron, we're going to react to this. Hope you guys enjoy this as always. Also, just so you know, we got the massive Become Master stock market sale coming up here in less than a week. It is a flash sale we're going to have on Labor Day. If you want to receive the deal to my #1 course ever when that drops on Labor Day, basically check out the pinned comment down there, enter in your email, and we'll send over this deal as soon as it drops on Labor Day. That's an amazing course. The amount of value you get from these videos is absolutely ridiculous, okay? So definitely check that out, pinned comment down there. Alrighty, guys, let's get into this. Hope you enjoy as always. Thanks for being here. I think we got less than 9,000 subscribers.
The market was going down significantly for 8 or 9 months when we spoke on June 17th. And at that time, virtually everyone you had on was saying negative things. And the concern was universal about inflation and higher interest rates and oil prices. And I want to point out that every time everyone tries to predict macro, they're almost always wrong. And from going back to Greenspan and...
Pause. He's 100% right. Man is spitting facts right there. Yeah. It's funny when the market's going down, everybody becomes a professional macroeconomics wizard, essentially. Okay, it's just funny how that works, and even folks that haven't been in the market very long, all of a sudden they got some strong opinion on what's going on in the macroeconomic landscape, and it's almost hilarious. But it's usually when the market's going down. When the market's going up, people don't usually want to predict macroeconomics for the most part, right? But when the market's going down, that's when everybody starts talking about the economy and what's going on with inflation and what could be going on with unemployment rate and wages and wage growth and all these sorts of things. So, and obviously macroeconomics. I mean, people that are like true professionals at macroeconomics have incredible trouble predicting macroeconomics, and these are people that just dedicate their lives to understanding macroeconomic cycles, and that's all they do. That's their thing, right? Even those folks have so much trouble predicting these things, and I just think that's something always to remember. That's very, very important. Okay.
96, when it was when he said it was irrational exuberance, and then the stock market doubled in the next 4 or 5 years. Or the executive you had on predicting oil prices, when oil prices, this summer he said oil prices, and he should know, he's the head of an investment bank, about oil, and oil prices were 120, he said to be 150 by summer, and now they're 90. Commodity prices overall, everyone was worried about them. Everything across the board is down 30 or 40%. The economy is slower, inventories are being destocked. Economy is definitely slow. Hiring freezes are taking place, so the economy is definitely slower. So it's easy to get out of inflation. It's impossible to get out of deflation. So we never predict anything about the economy or about the stock market. Just when you look at the prices of companies that were selling in June and that are selling still now, they're prices that are unusually attractive relative to the company's opportunities long term. So I can't tell you this was the bottom. Who knows? But the bottom line is that these are all really attractive prices, really attractive times, and we've been buying then, been buying since, and buying continuously.
His outlook's exactly like mine. When you get To predict the bottom's a sucker's game, man. It is such a sucker's game. And people fall for it all the time. They fall for it all the time and trying to predict the bottom. Oh, we're going to hit the bottom, or, I'm going to wait to buy because I think the bottom's going to be actually in 4 months from now or 8 months from now or next year at some point. It's like, that's just sucker. It's such a sucker's game. The bottom line is, if you see deals out there, take advantage of those deals, right? If there's a time period when you got to cash up a little heavier because you're in a position of weakness and in terms of your cash levels, cash up a little bit. But at the end of the day, like, if you see great deals, you can take advantage of those deals. Like, trying to predict, like, I think the market's going to go down 5% over the next month or the next 3 months or 6 months. Sucker's game, man. People fall for it time and time again. The best of the best investors in the world will tell you it's a sucker's game, and yet people still fall for the trap again and again and again, thinking they are the smartest ones. They can be the one that predicts, like, when the market's going to bottom or something like that. At the end of the day, if you see a great price on a stock that you love for the long term, and you think that company's revenues, net incomes, margins, everything across the board are going to go up, immensely over the next 3-5 years, you got to take advantage of that deal, man. That's just how it is.
I was going to get to a few companies, Tesla, SpaceX, the Lululemon of healthcare.
Ron, can I just continuing that for 1 second? Can I ask Becky if I could just add to that, because we do talk about it a lot, and there's been, I don't know if you saw how many people were calling for new lows all along from June 16th all the way up. Everybody we have on says we're going below 3,600 on the S&P, and I know you're not a short-term guy, and that's not what I'm looking for here. But what do you think of the notion that we had a really good bounce, but much more than most people thought, back to 4,200 or whatever you would say. Now it's being questioned again, and it almost makes me think, instead of that being a bull, a fake rally, a bull in an over.
The best rallies in the stock market are built on cautious, a cautious outlook by investors in general. Where they're like, I don't know if this is real. I think we're probably going to go back down. This is probably a fake rally. This is probably just a bear market rally. A lot of times you get the best moves in the stock market, and sometimes they last for a long time, sometimes potentially years, that are built on the back of people kind of being skeptical. Because if people are that skeptical and that cautious, that almost always means they're holding lots of cash or lots of short positions. That's why the best rallies are built on situations like we have right now, where people are like, I don't know about this. I'm kind of worried. And that's just what you see across Wall Street right now. It's kind of like this cautious, I don't know about this, man. This is just probably a fake rally. We'll see.
Bear. I think now this might be a quick bear fake out to question, to have people questioning whether they should be bullish. So yesterday we had a guy say, I've gone from selling strength back to buying dips. And I wonder if, that made sense to me. I don't think we see 3,600 again.
Something I always remember, we're in a bull market. We've been in a bull market for over 100 years now. Anybody that falls for anything else, you're getting suckered once again, man. You're getting suckered once again. We are in a permanent bull market, and people still don't get it. They still think, oh no, we're in a bear market. No, we're in a bull market, and we'll continue to be in a bull market for 100 years to go in the future. We're going to have dips, we're going to have crashes, we're going to have corrections, all that little short-term crap, and we're still going to be in a bull market, and you're still getting played if you're thinking anything else.
I've started in business in 1970, and then 1982 began Barron Capital. And at the time, we had a small number of assets under management. That the Dow Jones was 800, and people were really upset.
Think about that for a moment. Dow Jones 800, 1970.
The market being, inflation, interest rates. That was when I started Barron Capital, 1982. 800 on the Dow Jones. 82. Now 32,000. But if you go back to World War I, in 1918, we had the Spanish flu. We like to call things Spanish flu, Chinese flu. We never blame someone else all the time. But there was inflation, and we ended a war. And then the stock market, then you had the Roaring '20s. And in 1945, you ended World War II. And the next 3 years, you had inflation, higher interest rates. Debt was higher than the size of the economy. And the stock market, and then we started the Marshall Plan, 1949 to 1955. The stock market tripled. Then you had 1982. Of course, that was following the Vietnam War. You had a lot of inflation, high interest rates. And what happened? The Dow Jones went from 800 to 32,000. So do I tell you that the market is going to, so everyone is so short term. Everything is so short term. So Elon Musk says that the people who are most likely to be successful are the people who have long-termism, who think about things long-term, not now, and are optimistic. And then he says, and what you really need is people who have infinite time horizons, not tomorrow, not next quarter, infinite time horizons. So, he may not get to Mars, but he's certainly investing so he can, or people are planting trees, not necessarily because they're going to sit under them, but because other people will enjoy them. So I think that the idea here is that every single time there's been a financial panic, there's been a war, there's been a COVID, an economic, uncertainty, chaos. Whenever these sort of things happen, the government steps in every democracy that's ever existed and devalues our currency. And the way they do that, and the reason they do it is because they want to take care of their citizens. They want to get reelected, of course. And then they want to protect them. And they want to make the economy grow faster. And then to get out of the debt, this is not unplanned where we have this inflation now. This is planned. It's planned to make the debt worth less relative to the size of the economy and the economy to grow faster. It's a plan. And it always has been. And so what happens is we're investing in growth companies. So the growth companies are our hedge against inflation. No, we're not investing in commodities or Bitcoin or gold. We're not doing any of that. We're just investing in companies growing more than the economy. Economy grows 6 or 7% a year, 2 or 3% real, 4 or 5% inflation.
That's why I love Ron Barron. The man just straight spitting facts. Okay, now we're going to get into the stocks he's buying now and kind of my opinions on that. But I just, always remember this, like, the people that always are getting suckered are the ones that are get caught up in this like short-term mindset and thinking they can predict like everything that's going on in the short term and things like that. And it's such a sucker's game, but people just fall for it time and time again. And who are the people that always make out rich? Go back 100 plus years. Go back many hundreds of years. Who are the people that always get rich? The ones that own companies. The ones that have a bigger and bigger ownership in companies that continue to thrive over the coming years. Those are always the ones who make out big. Those are always the ones who end up with the biggest dollar amounts at the end of the day. It's the same thing over and over again. But people still fall for the same traps again and again and again. And, there's a reason I like Ron Barron so much, man. The man's just spitting facts out there.
Stocks you're seeing right now, Ron, you started down that road and we kind of took you off a different path. What are your favorite stocks that you have seen in this arena, the ones you've been buying the last couple of months?
All righty, here we go.
Well, the most recent biggest purchases I've made, people in my office are buying all the time. I tell them you got to keep buying. The two largest investments I've made in the past couple of months are SpaceX, where we added another $100 million, and Figs, which is you haven't heard very much about, but you will soon. It's the Lululemon of healthcare.
I heard about Figs a lot last year specifically, and obviously, with Rona in let's just call it focus. Figs got a lot of attention. And, with that one, I'm just trying to figure out, like, can they be commoditized? That's what I've been trying to figure out with Figs, because there's definitely been a lot of people that have kind of brought that one to me. I'm just trying to figure out, is it going to be commoditized, the product they have? Is it just going to be, commoditized? That's the main thing, right? It's what I'm trying to figure out right now. And just a bunch of, businesses in China are just going to flood the market all over the place with, Figs knockoffs, essentially. So that's kind of what I'm concerned with. SpaceX, that's not a public company, so I don't really have a strong opinion when it comes to that. I do have some insights on the company, but I don't, I don't want to comment on that one. I'll comment on some of these others.
And we invested about $100 million there. But I've invested across the board in travel. I love travel. It's been deferred.
Wow. Yeah, that one has definitely been, rough. It's been rough.
For 3 years, nobody's traveled, and now the business is really taking off, and we're investing in
11. This must have made this move while he was talking, I'm guessing. Holy smokers, that ain't no jokers. That must have literally made that move just while he was talking. Wow.
We're investing in Vail, we're investing in Red Rock. So Red Rock, they have, in Las Vegas, they didn't let...
It went up 17% just because he talked about it. That's insane. See, that's a man with some power, man. That's real power right there. You could just say, oh, yeah, we're buying this stock, and it goes up 17%. That's real power, if anybody's ever confused on what power really is. Red Rock, I have a strong opinion on this one. I know the company pretty darn well. I live in Vegas, out here a long time and studied that company. So let's hear what he has to say.
To have casinos next to hospitals, next to schools, next to communities, and so they rewrote the legislation. And when they rewrote the legislation, the guy who owns all of the casino land that can be built in Las Vegas, other than on the strips, in the strip you build a casino, $3, $4, $5 billion, and if you make a 10% return, you're very lucky. They're building in communities $750 million for the people who work in those casinos. So that's where they go for hamburgers and pizza and movies and beer and rent hotels by the hour. I don't know.
Wait, Ron Barron, man, I've been showing you a lot of love, man. You can't go talking about renting hotel rooms by the hour. That's not, no, Ron Barron, no, that's not what they do. What are we talking about here, Ron Barron? Come on, man. Come on, don't let me down now. Come on. But anyways, Red Rock, very successful company. They got actually a new resort. They're building about 10 minutes from me right now. And, they build nice places, but that aren't that crazy level of nice like that you might see on the Strip. They're not building the Wynn Resorts. They're not building the Palazzo. They're not building, the Cosmopolitan or the Aria or something like that, right? They're building nice places, and, you definitely get quite a few visitors that actually come to Vegas and they don't stay on the Strip, and they can stay at some of these other properties off the Strip for cheaper. And also the community, definitely uses a lot of these properties for restaurants and for gaming and things like that, because, as somebody that lives in Vegas, and Vegas's population's obviously boomed over the last decade and likely will, as long as our water doesn't run out, likely will boom for many decades to go in the future, right? A lot of locals don't like to go down the Strip because it's a Strip and it's like a tourist attraction and it's so busy and stuff like that. So I'd much rather go, if you're going to go, to game, let's just call it that, you're going to go to a property that's off the Strip, and it's usually a better experience and things like that. So just something to kind of keep in mind there. And obviously Vegas has attracted a lot of people with a lot of money from Southern California over the last few years. And, those folks just have more money to spend at the restaurants and do things like that. A lot of those folks have moved out here over the last few years.
They say invest in parking lots, so it's stripes in the parking lot instead of expensive rooms. So their investment return, they invest $750 million for a casino, not $3 or $4 or $5 billion. And instead of making 8 or 9 or 10% return, they make 20. And they got exclusivity. They got the only land. So I like that.
Pretty
I like Vail, which is taking data, and they're making it better, so they can attract people there, and they have these resorts that feed to them. Hyatt, they came to visit us about, a couple of weeks ago, and I love this guy, Mark Hoplamazian, and he was explaining how upset he was that analysts are valuing his company at 11 times for the hotels that he owns. He's selling these hotels because he's turning into a fee business and taking back management contracts. But he's selling them at 11 times. He's selling them at 17 times, and the stock market is telling everyone it's worth 11 times. Analysts are saying it's worth 11 times. They're selling them at 17 times. They're selling them, getting cash for them.
That's crazy. What he just explained there, that's insane. If you want to rewind that and watch that again, that's insane.
And take back management contracts. And then he's got this other business, which is managing those hotels, and that's selling 12 times, maybe 15 times. They're selling half price, and they keep buying stock. And I told him, I'm really busy right now. I can't really give him ideas about how we should present to investors, but, he should. I love Tesla. We've been investing in Tesla for 8 years now, since 2014. Made about 20 times their money, made about $6 or $7 billion.
He went through the tough times with Tesla. 2014 to 2019 sucked for Tesla stock, just to be quite frank. Tesla stock really started to go on its run in the back half of 2019, and then obviously 2020, 2021 went on its epic run. So he was in that stock for a lot of going nowhere when it comes to stock price. They were making tremendous progress with the business model, the revenues, everything like that. Not really the bottom line so much, and really until the back half of 2019. But yeah, he was there in the tough times. I will say that. On a
$380 million investment, I think we're going to make 3 to 5 times our money again over the next 10 years.
He thinks they're going to make 3 to 5 times their money on this stock over the next 10 years, he just said, right? So, if let's pull up Tesla last. I'm figuring Tesla's probably trading at $800 to $900 billion market cap right now. Let's see. Yeah, about 900 billion. So, I mean, if we're talking about, times that out by 5, roughly, I mean, we're talking about a $4 to $5 trillion market cap by the end of this decade. That would be bigger than any market cap of a company currently. Now, obviously, those companies can continue to grow into bigger market caps, but that's intriguing. That means, he's basically expecting this company to kind of be, let's call it a $3 trillion to $5 trillion type company. That's a massive number, So it's definitely possible. It's all going to be dependent long term on the bottom line, obviously.
We're excited. The next 10 years, I think that Tesla is going to be the largest company in the world. And in the 10 years after that, I think it'll be challenged by...
Okay, if he thinks that, then he also... It doesn't make sense. Okay, so if he thinks that, basically what he's saying there, if we try to read through the tea tree leaves, he should think it's going to more than 3 to 5x, unless he thinks all other companies are going to fail, which is obviously not very unrealistic. Here's the deal. Apple's already a maybe 2.6, $2.7 trillion market cap or so. If Apple just hardly goes up over the next decade, it'll be a $4 trillion or $5 trillion company, right? So for him to feel like they're going to be the largest, either all other companies are going to have to suck over the next decade, or maybe he thinks that Tesla's going to actually a lot more than 3 to 5x over the coming years. Maybe he's saying that as more of a conservative thing, because if he says 5 to 10x, maybe people just, will write him off and not even take it serious, right? Because if you say you think Tesla's going to 10x over the next decade, it does almost sound crazy, right? Because then you're talking about a company that's approaching a $9 to $10 trillion market cap, and we can't wrap our heads even around that sort of market cap. You can't wrap your head really around something that's, so far out there that we haven't seen. It was just, 10 years ago, people couldn't wrap their heads around a $1 trillion market cap. It was like, crazy. And even for myself 10 years ago, like to even think about $1 trillion market cap was crazy. Now we got several companies that are trillion. Now we got a couple companies that are multi-trillion, right? So, as time goes on, these things are easier to understand. But yeah, I mean, in the moment, that's when it's really hard to like wrap your head around and be like, wow, could that be real? Like a $10 trillion market cap, a $9 trillion market cap?
SpaceX. Which could become the largest company in the world. I was telling you about Figs.
Obviously, another Elon Musk company, SpaceX. You have
SpaceX
investments
is another.
in both.
Yes. So we own about 1% of SpaceX. We have about $1.2 billion invested. We've been investing for about 3 or 4 or 5 years. Our cost is probably $400 million. I think we're going to make 8 times the next 10 years, 8 or 10 times. And I think that the following 10 years, this can be a monster company. This is the internet for the entire world.
Wow.
Shepard Smith here.
I mean, a lot of big statements there. And once again, I don't want to comment on the whole SpaceX thing because SpaceX is still so early days. That's a company that's, basically almost pre-revenue, right? It's a company that, how's their business model going to shake out over time? When do they get profitable? I think there's so many questions there. SpaceX, if you're investing in SpaceX, it's on excitement and optimism, right? And kind of the progress you've seen them make with their incredible technology. I think if you're trying to predict out revenues, net income, net loss, margins, anything like that is I think that's a near impossible game to play at this stage of SpaceX. 10 years from now, it might be a very, very different story. But for right now, you're investing because the technology is incredible, and you're excited and you're optimistic about that, which is one of the biggest keys I think to somebody like Ron Barron's success over time, is being optimistic. And you have to be like that in the stock market to make the major money. Okay, you ever looked up Michael Burry's net worth? Think about that. Man, so smart, such a smart guy, right? Had family that had all these connections, had money. Why is he worth $300 million? And all these other guys worth billions and billions and billions and billions and billions and billions. Like, why is he 300 mil and everybody else is billions? Could be arguably more intelligent than them. He's pessimistic. The other guys are optimistic. And at the end of the day, damn, it pays a whole lot better to be optimistic than pessimistic. And I can promise you that, and it's always been like that, and it always will be like that. The net worth don't lie over time. Much love as always, guys. I appreciate you joining me. Let me know what you think about Ron Barron stocks there. If you think those are stocks to buy now, stocks to watch, I would love to hear from you guys, as always, in that comment section. Also, make sure you get access to the massive deal coming up less than a week from now on the Become a Master Stock Market course, my #1 course ever. That will be pinned comment down there, and we'll send you over that deal. You can put in your email, your number, whatever, and we'll either text over or send you that deal when the flash sale drops on Labor Day. Much love, and have a great day.